USA Today is not about the US housing market. It's not about today. I'm not sure what it is. I'm Bill Gross, my weekly real estate update. And USA Today presents itself as, quote, the American daily middle market newspaper. But its real estate reporting is clearly not. I wonder often, why do people buy the news or they think about it? Are you buying news because it's news? You want to find out what's happening in the world? Or is it news to be educational? Or you buy the news for entertainment? Now, if you enjoy reading USA Today, great. If it's entertainment value for you, I'm sure there's a lot of worse things you could do with your time. But as far as education, specifically in real estate, I would say it is not a good source. And we're going to go into that in a little more detail down below. Let's go into, as always, though, we should start with the statistics that tell us where the market is so we can understand with data what to expect in the marketplace. So mortgage rates continue to be in the bandwidth between 6 and 7%. And I'm going to show you these numbers real quick, and lost my spot. There we go. So we can see that so far in March, we did get over 7%. We've come back down now to 6.55 the end of the week. It's been in this bandwidth now for months. In fact, we go back to the beginning of the year. You can see almost the whole year has been between 6, slightly over 7, and kind of in that middle the entire time. So rates have been really stable now for about 3 months. We can say they're higher than they were a year ago, but that's already old news. That's a year ago. As long as the rates are what determine the value of the property because of the payment. So when rates are low by historical standards, then there's more demand. When they're high by historical standards, there's going to be less demand. And rates now are low given the amount of money in the economy today, and relative to the inflation rate, it's fairly low by historical standards. That's what's driven the incredible demand for the last 3 years. The other thing as a result is very little supply, very few homes to buy, and the inventory is low. And here's an example that continues. Currently in 2023, in March, we have just under 400,000 homes for sale, which is about the same as 2 years ago, significantly more than last year, but tremendously below any other year in history. Any other non-global pandemic year, inventory is extremely low and has stayed low and appears to be on declining standard, if anything at all. So we see that the inventory is low. In Los Angeles specifically, we see the market is basically being a slight seller's market. This is outsourced research. They do a real good job. They analyze a number of factors. Median list price, price per square foot continues to go up, meaning what are people paying for square foot housing? And overall, they give a rank of 41, which is a seller's market by a little bit. And so the market overall is, I don't know, as a real estate agent who's been in the business my entire career, I'd say it's healthy. It's a normal market where you have buyers and sellers. Buyers think they're paying too much. Sellers think they're getting too little. That's normal, at least in my experience. So where's the market headed? Last week I gave you a couple predictions that contradict each other. The three factors you have to always remember are mortgage rates, which are still staying low. Second, the inventory. But there's a few other factors that have a big effect on real estate, and I'll show those to you now. I came across some great research this week. From calculated risk, one reason why housing prices have to stay high is what's the alternative? You can either buy a house or you can buy a house and remodel it and fix it substantially, but that costs money, right? That costs labor, and that costs material. And given the inflationary times that we have, the price of everything has gone up. So while housing prices, maybe you would say, well, it should go down because of the rising rates, they can't go down because everything is going up in value. It's kind of like saying, well, is one restaurant raising their prices? They all are. The rising tide rises all ships, whether good or bad. And the rising tide in this case is being inflation. So let's take another factor, which I think is also equally important, is the lack of building new houses. You can see, here's a population chart. Since 1970, which is a good number to compare to, the U.S. had 205 million people. We've gone up to 332 million. So we basically got up about 15% since 1970 over the last 50 years. But in terms of housing built, we're about the same. We're building about the same number of units every single year that we have since 1970. And this is 2 units and 2+ units are going up tremendously. Are not going up tremendously. And so what happens is if you don't build more housing, there's no way housing prices can go up. And I'm sorry, If you have more housing, there's no way housing prices can go down, because with fewer houses, people will bid enough to get into a house. It'll force competition. People will sacrifice more to get into a property. And so it's important to note the underlying fundamentals. Stable interest rates, basically, with all the drama of the marketplace, mortgage rates stayed stable, inventory low and declining, and we don't have any new housing stock coming on the market. And there's another factor I think that hit the market big time last week. This bailout, I think that it's really been low-keyed. You know, if you follow the business news, you know about Silicon Valley Bank, you know about the failure of Signature Bank, if you watch it closely. These are the second and third largest bank failures in American history. At the same time going on right now, Credit Suisse is being bailed out or going to go bankrupt as well. So these are big institutions. So what did the Fed do? Well, if you've ever played Monopoly, basically the Fed it's kind of like putting $500 bills on the free parking spot. We jumped up the amount of money in a money supply. The Fed had been reducing it over the last 4 months. We've basically gone back in time 4 months ago. Another way to look at it is the jolt increase we had in 2008 and then in 2020 for the pandemic. We've had almost that kind of rise here in the recent time. We had 10% of the COVID rise just in this past week. So we've had some pretty big increases in the money supply and more money sloshing around. Some of that gets in the hands of buyers. In fact, let me show you another statistic that shows that this one's even better. Here's on a weekly basis, the Fed opened the markets in 2008 to avert the crisis or make it worse, however you look at it. 2020 during the pandemic, they dramatically increased the money supply. And then look what they did last week by comparison. $150 billion, most ever in 1 week. So really that's like playing Monopoly and putting $1,000 bills or $2,000 bills on free parking. Eventually there's so much money, it might get to be so much money that challenges the economics. So that's what's been going on. And I think with all that money, just like 2009-10, just like post-pandemic period, there's uncertainty. A lot of money dropped in, but all that money is going to go somewhere. And a lot of it's going to stocks, a lot's going to bonds, and you can rest assured a lot's going to go to houses. So what does the real estate news do? Mislead you. I just feel like we're playing three-card Monte with these people all the time. Here is an article by Redfin, who theoretically is representing buyers in the marketplace, and they're giving you this headline: nearly half of all home sellers are making concessions. Ooh, they're cutting the price, or they're paying concessions to buyers. Now, they give this chart that makes it look very scary. Oh, wow, look at that concessions, honey, higher than ever before. But this goes back to the pandemic period. What they don't show is this the normal level by historical standards. It's just during the pandemic when we had such incredible demand, we had so much money chasing the same number of houses. Just like we had toilet paper, just like we had cars, everything went up in price, housing went up in prices, and now we're getting back to a more normal market. So this graph is misleading just because it gives you no time scenario other than it's now saying that the housing market concessions are the highest during the COVID global pandemic and post-COVID period, which is another way of saying it's going back to the normal marketplace. I just think it's crazy how they put these headlines. Here's another one, Zillow. So Zillow kind of piggybacking on the news, Silicon Valley Bank response may bring down mortgage rates. May, notice the may, like they're predicting it. And this was written on March 14th, but on March 14th, let me go back. Ooh, I lost my spot, I'm so sorry. 2023, these things reset if you pay attention. On March 14th, rates were 6.75. They'd already gone down 0.25%. They'd already gone down even more than that. They probably wrote the article on the 13th and published on the 14th. I mean, I don't really understand. Are they saying they think the market in the future is going to go down 1 or 2 percentage points? I don't think so. They don't say that. All they're saying is it's going to go below 7, but by the time they wrote the article, it was below 7. So to me, that's just not helpful at all. But the prize of the week goes to USA Today and their national housing and economy correspondent, Swapna Venugopal Ramaswamy. Now, I'm happy that she's moved here apparently from India. She seems like a nice person, mother of 2, very nice, lives in Manhattan, New York. Here's the problem though. She's a sociology master's degree in journalism, which means she knows how to write well. And sociology, I'm not sure what that teaches you as it relates to the housing market. And grew up in India. Nothing wrong with that. Doesn't give you good insight into the American housing market. Maybe contrast and compare. And she lives in a very, very unique market, Manhattan, where most people lease, much more common. Most people live in condos. Very unique market, very limited. And again, remember, USA Today presents itself as a mid-market newspaper. And here you have a woman who's international and might be very educated, living in Manhattan, living her great life. But I don't think that gives her perspective on the housing market. And I'm going to show you 2 articles I think prove my point. Number 1, here's home buyers again retreat to the sidelines as higher rates crimp affordability. Now, this was written on March 7th. And again, just to go back in time and look at where the rates were, March 7th, rates were 7.03%. So actually rates have come back down since that time. It really hasn't made much difference. But I can tell you, having talked to buyers that time period, that 0.25% doesn't make that big a difference, right? It just really doesn't. And by the same token, sellers hear the news and adjust as well. But to say that they retreat to the sidelines, no, they look at other houses. They look at a different market. They say, well, gee, honey, we can't afford that house at 400. What can we afford at 380 or 370? They don't retreat out of the market. That's not how the business works, right? And a further example, I think, of where she's off track is this next one. She quotes a buyer. We'll live with blue and green tiles. Let me share this real quick. We'll live with blue and green tiles. Home buyers compromising to appease the housing market. Now, nobody appeases the housing market. People go out and make their own decisions. The beauty of capitalism is it's the invisible hand. A buyer goes out to buy what's best for them. The seller priced the house to be what's best for them. And the two come to terms because of the marketplace. There's no buyer who wants to appease the housing market. Every single buyer in every single geography, in every single price range, has to make some concessions. If you're buying a 3-bedroom house and you just can't quite get it, you might get a 2-bedroom and a den. If you want to buy in the best neighborhood, you might buy a little further out if you can't afford the best house in the best neighborhood. Even billionaires who buy houses with 30 rooms and 35 bathrooms don't buy the one with 40 and a heliport on top. They make some concessions. The nature of buying is getting a budget and then getting as much as you can for that money. There's always more. You can always build more. And when she reads the article, the thing that's most disheartening is she reads the article and she quotes this real estate agent and says, I've clients tell me they're not eating out as much. Well, good. That's a good thing. The new car purchase is on hold. And it makes it sound like they're cramping their lifestyle. No. That's the lifestyle of somebody who wants to get ahead. You cut expenses and put money into assets that produce for you in the long run instead of spending on your lifestyle. And so the way the article, the tone of the article, very common for New York, is poor us, poor me. I can't buy the house I want because it's not affordable. No, cut your expenses. You know, one of the choices my wife made and I made years ago was we cut out Starbucks and make coffee at home. And you just say, well, it's not a big deal. Well, $2 a day, 200 days a year is about $400. But that's just all pure profit. That's a choice we made. I'm not saying you should. What I'm saying is people make concessions and savings to get ahead in their life. The thing that amazes me when I meet people who are truly wealthy is how much time they spend saving money, making deals, where they shop, how they buy things. That's one reason why most people are wealthy. They make more than they spend, take the difference, and put it to work for them. And so, yes, it's natural. If you're buying a house, you might not eat out as much. That's why you're buying maybe a home to cook and enjoy your family meals at home. And maybe you don't drive as much or get a new car. Maybe you don't need one. Maybe you're buying a home closer to work and you don't need it, or closer to mass transit if that works for you. But I just think this article sends the one wrong message to buyers that somehow you're entitled to a house. It should be affordable. You should get what you want without compromise. No, that's not how life is. Life is compromises. Life is working hard to achieve things. Anything of value is. And I think USA Today, in particular their housing contributing writer, I think just does a terrible job of preparing buyers. So what do you think? Am I off base here? I think the news consistently lets us down. It's not good news. It's not good education. If you enjoy it as entertainment, good for you, but I don't see it to be particularly entertaining. So what should you do? As always, make the best decision for you and your family. If you need to buy a house because you need a bigger home or need to relocate, let's talk about getting the best strategy for you to buy a house. If you need to sell a home for whatever reasons, you're relocating, downsizing, need the money, then let's make the best decision for you and play the odds of the game to your advantage, not worrying about what the news is telling you to do. And if you do that, I promise you get the best outcome. If I can help you, I'm on social media at Bill Gross EXP. As always, call, text, or email me. I'm here to help you in any way I can. And as always, make today your best day ever. Thanks so much.